Hi folks, one of the main themes influencing global markets is the recent surge in oil prices. Brent and WTI crude appreciated to multi-year highs in October thanks to the combination of tightening supplies and rising demand amid the global economic recovery. Now, given how oil is an integral part of our daily lives, no matter where we are in the world, the movements in oil prices are significant and can have an impact on our living standards. Lately, there have been fears of a higher oil prices negatively impacting energy importing countries like the United States, China and India, among many others. However, appreciating oil prices is also good news for energy producing countries, especially when it translates to higher export earnings and government revenues. Nigeria is a perfect example for energy producing country in which it acquires over 90% of export earnings and 70% of government revenues from oil sales. It does not end here. The fuel subsidy shields consumers from higher international oil prices, meaning that the government fixes the price of gasoline for consumers below the international prices and uses government funds to pay for the difference. Petrol prices in Nigeria are currently trading around 165 naira per litre, but the average price of petrol in the world is roughly 490 naira per litre. On the surface, higher oil prices look like a win-win scenario for Nigeria as it provides the government more money to fulfill its financial obligations. Domestic consumers are also protected, enjoying low oil prices due to the subsidies. However, digging deeper, the dynamics are much more complicated. One thing to keep in mind is that Nigeria exports crude but imports all the byproducts of this resource, including the most premium motor spirit used for petrol or fuel. With Nigeria consuming more than its refineries can produce, the country largely depends on importation for its energy needs, which has recently jumped to over 70 million litres per day. Hence, rising international oil prices will put more pressure on the country's foreign exchange, which ironically is earned from crude exports. It does not end here. The revenues from oil sales may be drained by the fuel subsidies. According to data from the Nigerian National Petroleum Corporation, the NNPC, the cost of petrol subsidies may hit 1 trillion naira by December if oil prices continue to rally. This will impact the government's ability to fulfill its financial obligations and may even impact the recently approved 2022 budget. Nevertheless, there is still some light at the end of the tunnel. Nigeria remains on an ongoing quest to diversify away from the chains of oil reliance, while the Dangote refinery is seen being a major game changer. It will be Africa's largest oil refinery, which with an incredible capacity of 650,000 barrels per day, significantly reducing fuel imports, supplying the West African region with refined product. With its completion around the corner, this could boost confidence over Nigeria's outlook, even as it continues to diversify away from the chains of oil reliance. So what does this mean to you as an investor? Well, for international investors, higher oil petrol prices may result in rising inflation, which could hit disposable income and impact economic growth. The horrible combination of rising inflation and slowing growth may fuel fears around stagflation, with economies that are energy consumers under threat. You may be asking, how does this impact your trading portfolio? Well, surging energy prices may fan fears of a stagflation across energy consuming countries. This could hit global sentiment, boosting appetite for safe haven assets like the dollar, Japanese yen and gold, while pressuring global stocks. Keep an eye on shares of oil and gas companies as they could be one of the biggest winners from higher oil prices. Examples could be BP, ExxonMobil and Chevron, among many others. Now, given how oil remains a major talking point across markets, it may be wise to keep a close eye on the key dates that could impact the commodity. Investors use the monthly oil market report to gain insight into what OPEC thinks about outlook for oil, while these key decisions are made during the OPEC meetings. And these are the key dates you should look out for. The first major one, of course, is the OPEC meeting on the 4th of November 2021. Then we have the OPEC monthly market reports. The first one is the 13th of October, 11th of November, and 13th of December. So guys, these are just my thoughts, but if you are unsure of how you can take advantage or protect your portfolio, please speak to your account manager. We also have a team of educators who can educate you on how to safeguard your trading portfolio. Remember to like this video and subscribe to our YouTube channel for all things markets. Until next time, thank you.